Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot prices of steel mainly fluctuated. The domestic hot-rolled coil spot price fell by 10 yuan ton this week, and the rebar price also fell by 10 yuan ton this week. At the macro level, the escalation of contradictions between Iran and Israel has affected international crude oil and shipping concerns. The crude oil price has currently increased by about 20%. Moreover, the United States will decide whether to strike Iran within 2 weeks, further triggering inflation expectations and lowering the market's expectations for Federal Reserve rate cuts. On the industrial side, the weekly output of the 5 major steel products rebounded, increasing by 96,600 tons compared with last week. Among them, rebar production increased by 46,100 tons, and hot-rolled coil production increased by 37,200 tons. The output growth is due to the end of maintenance at some steel mills. Currently, steel mills have good profits and production may further increase. In terms of demand, weekly apparent demand remained high. After the weather cleared in East and South China, partial apparent demand increased, with an average weekly rise of 160,800 tons. At present, demand still performs well in the off-season, and expectations have been revised. In terms of inventory, affected by the recovery of demand, the overall destocking range of the 5 major steel products has expanded. The destocking is mainly in social inventory, while the destocking of steel mill inventory has narrowed instead. In summary, macro factors affect the emotional fluctuations of steel prices. The Middle East conflict may impact the underlying logic of bulk commodities, especially energy-related coal, which will form part of the cost support for steel prices. Fundamentally, steel demand is already in the off-season, and demand has fluctuated this week, but it is difficult for spot prices to reverse in the short term. In terms of profits, steel mills still have good profits, and some coil plants may continue to increase production next week. Therefore, under high supply, the speed of inventory accumulation in the off-season remains a concern. Due to the recent strengthening of energy expectations and the still good export orders, under the repair of expectations, the previous negative feedback expectations have been corrected and the price has shown a volatile pattern. Looking ahead, before steel mills reduce production to a reasonable supply, it is still difficult for steel prices to reverse. However, the maintenance of apparent demand and the rise in energy prices have also further narrowed the downside space. In terms of procurement, it is recommended to focus on just-in-time procurement and appropriately increase partial purchases. In terms of institutional sentiment, the recent short-term consensus bearish reflexivity has been ignited by the sudden positive news of China-US communication. The conflict between Iran and Israel has supported prices of crude oil and energy, with short-term fundamentals and macro factors leaning positive. However, from a medium-term fundamental perspective, the drivers for further upward movement are not obvious, requiring cautious treatment. To sum up, the recent steel prices have been mainly stable and volatile, with price expectations revised. In the follow-up, there may be a tendency for stronger volatility. In terms of varieties, billet is recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.